morning and welcome. You're watching the CommexFX Daily Outlook for Wednesday, February 18th. The euro rose 0.58% against the US dollar and closed at 1.1410 as data showed that Germany's ZEW Economic Sentiment Index jumped to a 12-month high level of 53 in February. The pair is expected to find support at 1.1344 and the fall through could take it to the next support level of 1.1285. The pair is expected to find first resistance at 1.1456 and the rise through could take it to the next resistance level of 1.1509. Amid a light economic calendar in the Eurozone and its peripheries today, trading trends in the pair today would be determined by the release of the Fed minutes scheduled later today. The British pound traded its head lower against the US dollar and closed at 1.5352. Britain's consumer prices eased more than expected by 0.9% on a monthly basis in January, against a 0.8% expected fall. The dip in consumer prices affirmed last week's comment from the Bank of England's Governor, Mark Carney, that the UK inflation will probably soon slide below zero due to tumbling oil prices. However, the Bank of England also indicated that inflation will rebound to notch its 2% target in about 2 years' time. The pair is expected to find support at 1.5311 and the fall through could take it to the next support level of 1.5270. The pair is expected to find first resistance at 1.5399 and the rise through could take it to the next resistance level of 1.5445. Trading trends in the pound today are expected to be determined by Britain's ILO unemployment rate data coupled with the Bank of England minutes scheduled in a few hours. The US dollar strengthened 0.65% against the Japanese yen and closed at 119.22. Earlier today, the Bank of Japan in its monetary policy statement announced that it will maintain its massive asset buying stimulus program and also mentioned that the Japanese economy was recovering moderately and was on the track to hit its 2% inflation goal in the next fiscal. The pair is expected to find support at 119.50 and the fall through could take it to the next support level of 117.91. The pair is expected to find first resistance at 119.55 and the rise through could take it to the next resistance level of 120.02. The Australian dollar strengthened 0.64% against the US dollar to close at 0.7813. Overnight data show that Australia's Westpac leading index rose 0.1% MOM in January. Meanwhile, the nation's CB leading indicator climbed 0.4% in December, following an advance of 0.1% recorded in November. The pair is expected to find support at 0.7790 and the fall through could take it to the next support level of 0.7760. The pair is expected to find first resistance at 0.7840 and the rise through could take it to the next resistance level of 0.7861. Gold prices traded lower by 1.93% against the US dollar at $1209.00 per ounce after a top Fed official stated that the US Central Bank should raise its interest rate by the middle of 2015. However, losses were capped due to uncertainty surrounding Greece and the tense situation in Ukraine. Meanwhile, gold holdings in the SPDR Gold Trust narrowed to 768.26 tons, compared to its previous level of 771.51 tons. The pair is expected to find support at 1196.56 and the fall through could take it to the next support level of 1186.83. The pair is expected to find first resistance at 1222.76 and the rise through could take it to the next resistance level of 1239.23. CommexFX is now offering a new application. Download the brand new CommexFX TradeMates app right now and receive daily market information, suggested market directions to trade on, highlighted best trading options and more, covering a wide range of markets including energy, metals, indices and forex, among others. Trade easily, trade successfully. For more information on CommexFX TradeMates app, kindly visit our main website www.commexfx.com. Stay in the know by liking us on Facebook, following us on Twitter and Instagram, circling us on Google+, and of course, subscribing to our YouTube and CommexFX TV channels. Have a great trading day.